Welcome back to Power Lunch West Africa. Mansard Insurance has reported a 55% increase in half-year earnings per share to 14 Kobo. Now, the insurance company saw gross premium fall 4.3% to 7.5 billion naira. However, profit after tax soared 104% to 1.8 billion naira. Now, the result reflects a significant increase in revaluation of assets of about 1.25 billion naira. The company is proposing a dividend of 4 Kobo per share. Tosin Rushewe, Chief Client Officer at Mansard Insurance, joins us now for a look at the facts behind the figures. Thank you so much, Tosin, for joining us. Now, what, in your opinion, what drove the decline in gross premium written in comparison to what the numbers were the prior year?
I think if you recollect, the regulators of the insurance industry, NICOM, early this year came up with the no premium, no policy and no cover policy. And essentially what this means is that unlike previous years where large corporates, would book, would accept cover and during the course of the year gradually pay down, on the premium receivable, this year you have to pay for your insurance cover before you actually accept cover. And this means that a lot of, or the implication of this is that a lot of large corporates have then restructured their insurance programs, such that some of them are now spreading their policy over 4 quarters. Some of them are doing it on a half-year basis. And transactions that we would have booked premium income for in January are now being booked, every quarter, January, April, July, etc. So this has resulted into, a significant slowdown in the turnover coming from the large corporates. With the retail clients, it hasn't really been so. Our retail business grew 20% year on year, but the corporate market actually suffered a decline of about 11%.
Now, one would imagine that the corporate market will react more positively than the retail market to that policy from NICOM.
Well, if you also think about the cash implication for a lot of the large corporates, you're talking about large amounts of money here. And so for some of them who are really very keen on managing their cash flow, they are still buying, the policy, but they just sort of like paying over a period of time and, accepting cover for 90 days and then after 90 days, another 90 days, etc. So that's what we're beginning to see. With some of the retail customers who already were enjoying, this sort of, program, there has been no change for them. With some of the retail customers that would pay, 1 year ahead, some would pay on a monthly basis and use direct debit. So with the retail customers, we haven't seen much change. We've seen the continued growth, for Mansard in that area. I think the major change has come from the corporate market.
Okay, so going forward, that will be a key driver for your more robust bottom line.
Well, the flip side of it, Esther, is that we have also seen a huge drop in trade receivables. You recollect that one of the biggest problems in the insurance industry has been the large receivables, which the industry traditionally had. With us, at Mansard, we have seen a drop of 66% in trade receivables from half year last year and half year this year. So that has resulted into better cash flow, and we expect that going forward, this will remain. And once we go past this year, which is the correction year, I think growth would return to the industry as a whole and definitely to Mansard.
Okay, well, let's take a deeper look at the numbers. Let's talk about the net gain on financial assets. That was quite significant for you. And the net fair value gains on assets, that yielded about 1.2 billion naira in comparison to the 35 million naira that we saw in 2012, now reflecting significantly to the bottom line. Do you think this is sustainable for your company?
That figure is actually made up of 2 different things. You have a revaluation gain of about 1 billion naira coming from the revaluation of a new commercial property which we put up recently, which became operational in the first half of the year, and about 260 million proceeds from the sale of shares in an unquoted equity, in an unquoted stock or quoted company. So I'll talk about the revaluation gain, which I guess is what you're really worried about. From the point of view that we will not put up a new commercial property every year, I would say no, this is not sustainable. However, the asset is already operational, and we expect the asset to actually deliver superior returns over the foreseeable future.
Some might argue that yes, this asset was revalued, and they might say that is that a true reflection of how much the bottom line grew, meaning that perhaps in real terms, if we take that 100 billion out, then we might have been looking at a much slimmer bottom line, as it were. As
a conservative person, yes, I would tend to agree with that, in the sense that if you take that out, then perhaps we have only grown by about 5% on the bottom line. But the reality also is that the asset does exist, the asset does belong to us, and what we have done is to use actually a very conservative means of revaluing this particular asset. If we were to be very aggressive, perhaps the asset would actually be worth a little bit more.
Okay, so going forward, basically, what to expect for that rest of the half of the year, and what kind of numbers should we be expecting? Well, in terms of your top line and bottom line especially.
I think that by the end of Q3, we expect to have seen a growth in the business year on year, because we saw a marginal decline of 4% as at half year. By Q3, we would see a growth, and definitely by end of the year, we'll see a growth. Overall, even if you back out the revaluation gain, by the end of the year, we expect to see an improvement in the profitability over and above last year's figures.
Okay, let's delve outside into the main insurance industry. Now, you're probably familiar with this recent poll by NOI on insurance penetration in Nigeria. Very staggering numbers. 86% of Nigerians are said to be without any form of insurance at all. And of course, they say that they attribute this to low awareness, perhaps on the part of the industry regulator, and maybe also on insurance players themselves. Your thoughts on that?
I think the regulator is doing a lot, to be honest, whether from a regulatory perspective or from even trying to deepen the market from that perspective. I think a lot of these falls on the operators. I think the operators simply need to do a lot more in terms of promotion, in terms of expanding their distribution channels, as well as in product innovation. I think more and more people are asking for different types of products that are significantly different from those products that had been sold 10, 20, 30 years ago.
Or that perhaps target a particular sector of or group of the population, you think?
Yes, I think definitely. Market segmentation is also very important here. Continued segmentation of the market, will also, facilitate innovation of products, in the sense that you'd have to come up with products that are best suited towards different market segments. So I think it's...
Do you think we're doing enough of that? Do you think the industry players are doing enough of that?
I think the industry needs to do more.
Out?
There is definitely a big improvement today over the last 10 years. But I think that it's we need to do more as operators in this particular regard.
Okay, well, let's leave it there. Thank you so much for sharing your thoughts with us, looking at your Q2 numbers. Tosin Richard, Chief Client Officer.